Kenya's competitiveness as a preferred economic hub and investment destination is expected to suffer a major setback amid palpable risk of massive investors' flight as the Finance Act of 2022 that amended the Income Tax Act, increasing the capital gains tax rate from 5% to 15% takes effect beginning January 1st, 2023, the informer can reveal. Real estate dealers, property owners, developers and investors will henceforth pay higher tax charges upon the sale of properties by 200% increase or a threefold increment. The CGT is imposed on gains accrued from the transfer of property, buildings, land or shares in Kenya acquired on or after January 2015. However, property transfer for the purpose of securing a loan, transfer of assets between spouses, transfer by a creditor for the purpose only of returning property used as a security for debt or a loan, and transfer of shares listed on the Nairobi Securities Exchange are exempt from CGT. The National Treasury successfully increased the CGT to boost revenue collections by the Kenya Revenue Authority, which has been given a higher target in the financial year 2022-2023. President William Ruto has set his first budget at 3.64 trillion shillings, giving the taxman a higher target as he seeks to build his economic legacy that promises to create jobs for the poor millions. However, most of his administration's spending, which will begin next July, will be on programs aimed at economic recovery. This is the second time the proposed increase has made after the first attempt in 2019, when Treasury had sought to increase the tax rate to 12%. The move was, however, again been opposed by investors and developers. They have asked the government in the second attempt to retain the CGT at the current rate, as the proposed increase translates to a 200% or a threefold increase. Sector players say this is a drastic increase in less than 1 year, as the clause becomes active in January 1st, 2023. Comparatively, each East African states have higher CGT rates than Kenya. For example, while Kenya's CGT rate for the resident stands at 5%, in Uganda and Tanzania, CGT rate for the residents is kept at 10% respectively, while Rwanda's CGT rate stands at 30%. Just like many stakeholders, the National Assembly Departmental Committee on Finance and National Planning in their Finance Bill 2022 report vehemently opposed the National Treasury push and proposed that the CGT rate of 15% be lowered to a rate of 10%, citing that Kenya is yet to adopt a mechanism to address inflation adjustment in the increased CGT high level of inflation. However, the National Treasury push sailed through despite recommendations by the committee and stakeholders. Stanley Lugaria, The Informer, uncovering the truth.